shifting focus towards the bullion market, where the bullion market is showing signs of steady recovery after recent turbulence. 24-carat gold is currently trading at rupees 15,394 per gram, translating to around 1,53,940 per 10 grams. For 22-carat gold, the rate stands at 14,111 per gram. On silver, the price is holding at approximately 280 rupees per gram or rupees 2,79,900 per kilogram. Now, these figures reflect a modest rebound in the domestic rates, supported by positive global sentiment, renewed safe haven buying and easing pressure from the earlier correction that saw gold drop sharply from its all-time highs above rupees 1,83,000 per 10 grams. City-wise variations remain minor, slightly higher in places like Chennai and Delhi, lower in Mumbai, but the national trend is consistent. Let's in fact take a look at the gold and silver prices today as compared to yesterday's prices. We'll see how the graph looks like, because we saw a slight increase in gold prices, then a very sharp drop. So let's look at how the prices look like today and versus yesterday. So these are gold prices per gram today versus yesterday. Today is the 4th of February 2026. 24-carat gold per gram stands at rupees 15,394 and yesterday it was at 15,393. 22-carat gold stood at 14,111 rupees, while yesterday it was at 14,110. 18-carat, very similar trends, 11,546 rupees per gram, and yesterday it was at 11,545. So we see a slight increase of around a rupee. That won't make a difference in the larger picture, but let's compare it. Let's compare silver prices now per gram. Yesterday it was at rupees 280.08 for 1 gram, and today it's at 279.90. So it's seen a sharp, it's seen a slight decrease in the price. 1 kg silver, yesterday it cost around 2,80,000 rupees. Today it's costing around 2,79,900 rupees for 1 kg. So this is something that silver obviously saw a sharp rise too, but it's slowly correcting, stabilizing itself in the market. Let's in fact discuss this further with Dr. Sharat Kohli, senior economist, who's joining us on the broadcast. A very good morning to you, Dr. Kohli. Thank you for joining us on NewsX. We appreciate your time. Dr. Kohli, finally we are seeing gold and silver stabilize themselves. Do we call this a recovery phase? What do you observe in these price trends, sir?
Good morning, Shivani, to you and the viewers. I think after crashing by around $1,000 from 5,602, gold came down to almost $4,600. From a peak of 1,80,000 per 10 grams, it really fell to below 1,40,000. And then I was always envisaging this recovery. We should understand why the crash came. It came because Kevin Walsh was picked by President Trump for being the next nominee of the Fed, and he supposedly came on an assurance that he's going to strengthen the dollar, which temporarily led to strengthening of the dollar index from 96 to 97. It recovered. By the way, dollar index, for the sake of viewers, consists of 6 principal currencies around the world. So I think that was speculated. So what happens at the end of the month, there is expiry at COMEX in New York, from where the price recovery of gold and silver is made. So a lot of speculators, they did not roll over their contract. Now, the people who don't understand what a rollover is, when your contract expires on a particular date, you buy it again for next month. So that rollover did not happen, hence came the selling. But obviously, because everything was speculated, nothing has happened. Kevin Walsh is only going to come in May. No major dollar recovery is being done as of now. Vis-a-vis other currencies, of course, now vis-a-vis Indian rupee also, Indian rupee has recovered, but against dollar index. So that was temporary. All the underlying factors, Shivani, which lead to gold and silver to climb are very much intact. In fact, the geopolitical tensions have tightened because I think one of Iranian drones last night has been destroyed by Abraham Lincoln, the U.S. Ship. I think that might heighten the tensions, although there is a mediation talk which is going to happen on 6th of February. So I think this date will be very important, because if these talks fail, which I hope they will fail, because the conditions laid down by the U.S., I don't think Iran is going to accept. So, and if these talks fail, then there is an imminent threat of a military action, which will, so geopolitical tensions, Russia-Ukraine, things are also aggravating despite UAE mediation talks. And of course, the central banks, who were huge buyers, which led to this surge in the past, they haven't sold a penny. They haven't sold even 10 grams of gold. So that is a major factor, plus investment demand. I think this is a good opportunity for investors to step in, although the advice on investment should be taken by your respective investment advisors. We are not inciting anybody to invest. But if you see, the long-term trend of gold is still very much bullish. And I think it's a huge opportunity for people who were feeling FOMO, fear of missing out. I think they can pick up the in smaller quantities. But the problem, Shivani, happens is that people come as investors and they become traders. You know what I mean? Because you look for small profits, exit. Whereas I've been regularly saying on your shows, on your channel, that people should hold it for 2 to 5 years. An ideal time would be 3 to 4 years, but between 2 to 5 years, if you hold, it can turn out to be very good. And also, it's not, although your channel, of course, is a news channel and it's your duty to report, but people who are investing should not, I see people pulling out their phones 5 times a day and checking out prices of gold and silver. I don't, because that leads to a psychological, phenomena of ending up selling it on some day and sacrificing the larger gain in exchange of a very, very small gain. So I think the long-term trend is bullish, and this correction should be seen as an opportunity, as I've said. In fact, the day it fell, I was the first one to speak that this is temporary, this is speculative, this is because of the derivative market and the commodity exchange, and a good opportunity. Keep it for long-term, and the long-term trend is very much bullish. So long as President Trump is in the seat, you will see a lot happening around the world, which will drive up the gold and silver prices, Shivani.
Right, Dr. Kohli. In fact, before I let you go, I want to understand, so long term it looks bullish, but in the short term, over the next few weeks, do you see a lot of volatility in the prices of gold and silver, since you've mentioned the geopolitical trends that are in fact driving these prices, or do you see a steady up and down graph?
Well, because as I said, there is a lot of speculation which happens. This happens through forward contracts at the commodity exchanges. In fact, far more than gold and silver is traded in a contract form, not physically. You just buy a contract for next month and then it expires. You take away your profit or loss, give some margin. So I think speculation is going to be high in these two metals, which means that volatility will be high. So don't be surprised if you have a similar correction somewhere in the end of February when the contract expires. So these corrections, these volatility will remain. But what is more important is for investors who want to keep it for a longer term, I think they should just simply ignore. A lot of people got worried when the prices fell. People had bought at high levels, and even people who are holding it at older prices, they felt that their notional profit has come down. They were calculating their own profits and their valuations at home. So I think, yes, minor correction should not be looked at, which is why I said, for an investor, you should not pull out your phone 5 times a day and, keep checking the prices every time. Oh, now it's down, now it's up. I think just forget it. I put it in Hindi that sone ke saath sona hai. Just go to sleep with gold and just keep it for a long time. Don't look at it. And yes, there will be corrections. It's going to be highly volatile because of high levels of speculation going on in COMEX and MCX in India.
All right. Thank you